What if I told you that one of the hottest AI stocks could be hiding a massive secret? Is AMD truly as undervalued as it seems? Or are there major red flags waiting to unravel everything? Stick around, because today we're diving deep into why AMD's stock is slipping, the potential pitfalls lurking beneath the surface, and what you absolutely need to know before making a move. Trust me, you might be shocked by what we uncover. Alright, let's talk numbers. AMD's stock has been on a slippery slope, dropping over 10% in just the past week, and an eye-watering 34% over the past 6 months. That's not just a stumble, that's a freefall. But the real mystery isn't just the drop. It's why some of Wall Street's brightest minds are actually turning away from AMD, despite the global AI boom that's supposed to be fueling semiconductor companies. What's going on here? Today we're pulling back the curtain on a shocking downgrade by Goldman Sachs, Microsoft's monster AI spending plans, and the million-dollar question. What does this all mean for AMD? Is this a massive buying opportunity, or a trap you want to avoid at all costs? Stock slump? Let's break it down. AMD has been under relentless pressure lately. Over the past month, the stock is down nearly 11%, and in just 6 months, it's taken a brutal 40% nosedive. And here's the kicker. From its all-time high, AMD's stock has plummeted more than 45%. That's a steep hill to climb for any investor. Historically, AMD has found strong support around the $100 mark, a level it hit in 2020, 2021, and even last year. So, are we heading back to that level, or could things get even worse? The catalyst for this recent nosedive? A surprising downgrade by Goldman Sachs. Analyst Toshiya Hari shocked the market by slashing AMD's rating from buy to neutral, and the price target dropped from $175 to just $129, a whopping 26% cut. This sent AMD into a tailspin, with the stock falling over 5% in pre-market trading the very next day. The downgrade explained. Why the sudden shift? According to Hari, two major concerns stand out. The AI growth bubble. While AI has been a darling of Wall Street, there's growing concern that the sector's sky-high valuations are unsustainable, especially as growth rates inevitably slow. Monetization worries. While companies like Meta and Amazon have showcased how AI can enhance their businesses, the big question for many others, including AMD, is how do you turn AI hype into cold hard cash? If they can't figure it out soon, companies might pull back on their capital spending, and that's bad news for AMD. In addition, AMD is scheduled to launch 2 new GPUs called MI325X and MI400 between 2025 and 2026. The real question is this already priced into AMD's stock? With a 45% drop from its peak, has the market already accounted for this uncertainty, or is there more pain ahead? Microsoft's raw. Now let's zoom out and look at the broader AI spending landscape. Microsoft, one of AMD's biggest partners, recently revealed plans to spend a jaw-dropping $80 billion on AI infrastructure in fiscal year 2025. On paper, this sounds like a golden opportunity for AMD, right? But here's the catch. Microsoft's fiscal year 2025 started in July 2024, meaning they're already halfway through that budget. In Q1 alone, they've spent $20 billion, which is on track with their goals. However, if AI's return on investment starts to falter, don't be surprised if Microsoft or other companies begin to tighten their spending. This could have significant ripple effects for AMD, whose future relies heavily on these AI-driven partnerships. The numbers game. Let's dive into AMD's financials for a moment. Over the past 4 years, the company's revenue, EPS, and EBITDA have shown impressive growth, except for the most recent year, when revenue dipped nearly 5%. This drop has understandably impacted their EPS and EBITDA, raising questions about whether this is a temporary setback or a sign of deeper issues. Even more concerning, over the past 2 years, AMD's operating cash flow and free cash flow have been struggling. To combat this, AMD appears to have turned to stock repurchases in an attempt to boost shareholder confidence. But is that enough to offset declining fundamentals? Here's where it gets tricky. Analysts estimate AMD's EPS for next year at $5.13, which would give it a PE ratio of 23.3, roughly in line with the broader market. If AMD can hit or exceed those earnings, we could see a price target as high as $160, representing a 40% upside from current levels. But what if AMD misses the mark? If earnings come in closer to $3.75, the stock could tumble to $75, a 35% downside from here. That's a huge risk for anyone thinking about buying in now. Key risks and opportunities. The semiconductor industry is facing headwinds, but it's not all doom and gloom for AMD. They've been aggressively expanding their product lineup, particularly in data center chips and Ryzen processors, both of which have seen strong demand. But the real challenge will be maintaining this momentum as competition heats up and macroeconomic pressures weigh on capital spending. One of the biggest unknowns is how AI spending will evolve. If companies like Microsoft and Amazon continue to pour billions into AI infrastructure, AMD stands to benefit massively. But if those investments slow, AMD could struggle to maintain its growth trajectory. Here's the detail of AMD's return on asset. The return on asset increased at 2020, but then continued to decline since 2021. Investors should be concerned about the sharp decline in profitability. Meanwhile, the degree of financial leverage decreased in 2019 and in 2020, but increasing since 2021 until 2023. It seems AMD's EPS are pretty fluctuative, increasing its reliance on debt, becoming more financially risky. The company's financial risk profile has significantly shifted over the past few years, and the degree of operating leverage averaged 6.22 from 2019 to 2023. Seems AMD has a high fixed cost. Investors should be aware of the inherent risks associated with high operating leverage. So what's the takeaway here? If you believe our analysis could be improved, we'd love to hear your thoughts. Share your critiques and comments below. Let us know what you think about this stock, how we could better predict its performance, and why you think we might have missed the mark. Is AMD a steal at these levels, or is it a ticking time bomb? Based on current valuations, AMD appears to be overvalued by about 21%, with a DCF valuation of $91.33 versus its current price of $116.18. For now, my recommendation is to sell the stock or add it to your watch list. Keep an eye on their upcoming earnings announcement. It could be a game changer. And remember, only invest money you're prepared to lose. The semiconductor industry is volatile, and while AMD has immense potential, it's not without risks. Before you go, don't forget to hit that like button if you found this video helpful. Subscribe for more in-depth stock analyses and check out .m-arm.com for even more insights. See you in the next one.